Hello everyone. It's Khaled. Welcome to today's daily pitch, 12th of May 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, we will start with our economic calendar and see what do we have as pre-planned economic events for today, and then we will proceed with analyzing USD JPY, oil, and gold prices, what potential trade ideas we have for today. Okay, so looking at our economic calendar, we had already some pre-planned economic events, and what will be, of course, more important is the CPI data or the inflation data in the US. We had some data for the house spending for Japan, which came in really lower than forecast and lower than the previous. We had the CPI for Germany, similar to forecast. What else? We had the German economic sentiment in the negative but better than forecast. But what is the main focus today in the markets is the CPI data for the US. If we look at the CPI, especially the year over year and not the core excludes food and energy. The year over year is expected to jump from 3.3 to 3.7%. And we all know that the goal of the Feds is to reach the 2% target. So this number, of course, will bring some impact, especially if it is higher than expected due to the higher oil prices. We would see what will be the potential impact right now on the charts. Before that, looking at our charts, let's have a look on the general economic situation. The dollar index is still opened on the week with a gap up, of course, after the headlines that I shared already on our Telegram channel. The headlines that the US and Iran did not reach a deal after the 48-hour timeline, they did not reach a deal as well. This was reflected as well on the 10-year treasury yields. They are moving up because of oil prices moving up. And finally, regarding the VIX, is ticking up and approaching the 20 level. Our first pair to analyze today, of course, will be the USD JPY. In addition to that, as I said, we will move to oil and gold. Let's have a look on USD JPY, and on purpose I have selected the JPY pair because we are seeing some sharp volatility on USD JPY. If we look at the chart, we can see that these candles have not very usual movement. And to be more specific, I'm going to move to the 5-minute chart to show you these aggressive moves that is taking place. Whenever on any JPY pair you see such price movement, even on the 1 minute we can see it. Where is it? For example, such movements like this. Whenever you see a candle drop of 70 or 200 pips, especially on any JPY pair, this means that there is either a real intervention from the Ministry of Finance in Japan or threat of intervention. The 160 level for USD JPY, usually it is the level where the traders become very careful because it is the level where the Bank of Japan or the Japanese government in general, they will start to say that we could do some intervention, the volatility is high, and this level is not very favorable for them. As for the trade ideas, first let's go to the 4-hour time frame. I will keep this level here at the 161.7. I will keep this level here, and I will draw not a major but like a minor level where we saw several rejections and several interventions taking place, which will take place here as well. I'm going to draw it at the, let's do it like this. Okay, around the 160 level, it is like the psychological level, the 160, where a lot of volatility takes place and we see a lot of volatility. So our number one trade idea, what is it? My first scenario and first trade idea, and this trade idea, I don't advise anyone to trade from now until the CPI. The CPI will be released in around 3 hours approximately. Yes, approximately in 3 hours or 2 hours 45 minutes. So the following trade ideas, personally, I will not take any trades, just wait for the upcoming CPI. All the trade ideas on USD JPY, oil, and on gold as well, it is related to the CPI after the release. And whenever we go to oil, I will show you one entry that I took during the night and what was the result, what is the reason of the entry, and what was as well the result and what could I have done better. Scenario number one, back to the chart. Scenario number one, In case we have the CPI numbers higher than expected, and here whenever we're talking, maybe the CPI here will be above the 3.7 or above, this could show that the Feds will keep interest rates higher for longer, and I believe the USD JPY will be breaking this first area of interest, which is 158.8, and it will be testing the 160.5. But here it gets tricky. Even with stronger US dollar, even if we see that the US dollar is breaking higher and retesting the 98.8, whenever the USD JPY reach the 160 and above, we are back again to the intervention threat. That's why for anyone taking a risk, taking a trade, you should watch out for the risk whenever you reach this level, because as we said, even if you have a stop loss, let's say you're in a buy here, and your stop loss, simple example, let's say you're in a buy here, the price is moving up, you are in a profit. In seconds or in minutes, whenever intervention take place, your either stop loss will be hit, and most probably you will get a slippage due to the high volatility and high spikes. So scenario number one, I will monitor these levels in case the US CPI is higher than forecast. My next scenario, if the CPI is lower than forecast, I would like to see that the price action breaking below these candle lows, below the 155.8. And what do I mean by this? Seeing an intraday candle closing below this level, the next candle making an upper wick. My next area of interest I will be looking for, as you can see here to the left, is the 152.5. This is scenario number two I see on USD JPY, and in this case if the CPI is lower than expected. The final scenario and the least favorable scenario for us, what if the CPI is similar to forecast? In this case, we could see just the following price movement with no clear direction, waiting for the markets for the next fundamental catalyst. We'll put this one in orange, this one in red, and this one in green. So if the CPI numbers are similar to forecast, nothing new in the markets will be waiting for the next fundamental catalyst, and mainly it will be related to the geopolitical tensions taking place in the Middle East. It will affect the US dollar. We will see just a consolidation like this. This is my trade ideas regarding USD JPY. Let's move on to Brent and see what is going on. Okay, let's zoom into the 1 hour time frame. This was our analysis last week. We were at this level. We said that we need to see a strong break candle. Exactly. We said that we want to see a strong break and none of the intraday candles closing above this level in order to be moving down to the 93 again. But this didn't take place. Of course, the next candle engulfed the 1, 2, 3, 4, 5, 6 approximately. You can see that the candle body, now speaking technical analysis and candle reading, you can see that this one bullish candle engulfed all 1, 2, 3, 4, around 4 hours of bearish candle. This is more times than not, it's a strong indication that the bulls are in control once again. And not only that, we went up, and later on during the week and during the weekly open, we gapped up, we retested these candle lows here, these candle highs, and currently we are at our next area of interest. So the trade ideas for me are as follows. Scenario number one, in case we don't see any further escalations taking place in the Middle East, we could be just consolidating here, and we could see some potential profit taking on oil, retesting, I'm going to say retesting these candle lows at the 104. This is the first scenario. Scenario number two, in case we see further escalations and more threats taking place, this could bring a bullish momentum for oil. I want to see an intraday candle closing above these candle highs here. So here I will take it as a no trade range. I want to see an intraday candle closing above this level, the next one making a lower wick, not breaking below it, and I believe it will not be, it is possible that we could retest these candle highs here once again. Keep in mind that the oil prices are more affected by what is going on in the Middle East more than the inflation data in the US. USD JPY, of course, it's affected by the CPI. Gold will be affected by the CPI, but oil prices, what's more holding more weight right now is the geopolitical tensions taking place in the Middle East. So to be honest, regarding oil, I have these couple of trade ideas. I don't want to put too much level, especially whenever you look at oil. We are currently at the 1 hour time frame. You can see that a lot of candles are having upper and lower wick, and these candle spikes are not the best favorable for us because you could have a stop loss, you will get wicked out, and price will continue in the direction that you were planning. And of course, this is very annoying, and psychologically it will not help you during trading. That's why on oil I'm marking several areas of interest. If price is just consolidating between a range, I will not look at oil, I will not take any trades. Okay guys, finally let's move on to gold. Before moving on to gold, if you like our content, don't forget to leave us a like, follow and subscribe. If you want us to analyze any currency pair, you can type for us in the comment section and we can cover it together. So on oil, I took a couple of trades. Let's move on and see what is happening. This was our analysis last week. We said that we could reject from this level. Actually, we rejected from the 50, a little bit lower, and then we digged higher. We didn't reach the area of interest, which is 4,780. We digged lower and then we moved higher. So to be honest, the price action on gold is not the best. You should be very careful. Couple of trades I took two trades, one yesterday and one today. First, let's delete all these. Let's fix the lines and okay. So I had an area of interest which was here at the 4,760. This is scenario number one. And yesterday I had as well an area of interest here, which was at the 4,700, yes, approximately here at the lower time frame. The trade I took yesterday was messy, was not the best price action. I took a sell here at this level. My stop loss was around 150 pips, and I wanted to see a take profit at this level. But after looking at the price action and looking at the volume and volatility in the markets, I saw that, let's zoom in a little bit to the lower time frame. Yes, I saw that the price action was rejecting here several times. So what I did, I took some profit at this level. I had another time I took profit here and kept a risk-free runner, which I was expecting to reach the 4,660. This didn't take place. All in all, my risk to reward ratio was 1-to-1. Not the best, of course, but it's a win, not bad, especially with this price action. My next entry that I took, before sleeping, before the Asian session, I set a limit at the 4,760. My take profit, my stop loss, it was like this. My stop loss was at 150 pips. And my take profit was 300 pips. I woke up and I saw that the trade was taken. Price almost reached my stop loss. My stop loss was, let me fix it a little bit. It was exactly at 60 and 75. Yes, so zooming in, I woke up and I saw that my trade was taken during Asian session. Price went up, missed my stop loss by around the 20 pips, and then directly to my take profit. On purpose, I put only 1-to-2 risk to reward ratio because I didn't want what happened yesterday to happen to me during my sleep, where I cannot trade manage. I didn't want to be at 200 or 300 pips in profit and then price reversing and hitting my stop loss once again. It is a good trade, yes. It is annoying, of course it is annoying to some point whenever you put 1-to-2 and you see that you could have taken, let's be realistic, a 1-to-3 risk to reward ratio, but it is what it is in the markets. These are the two trade ideas I took. As for today, London session, pre-London or London session, I didn't take any trades. So let's have a look what potential trade ideas we could have together. I will be marking this zone here at the 4,650. As you can see, although gold is consolidating in this range, but for a day trading or scalping, it's a very good range you can take advantage of. Scenario number one on gold, that in case we see that the CPI numbers are higher than forecast, in this case, we will have dollar strength and gold weakness. So even at the initial release of the data, you could see like a liquidity grab like this. I want to validate by breaking these lows, and my next area of interest will be these candles here at the 4,650. This is the first scenario. So the next scenario, even if I see that gold prices is retesting the 4,760 or digging a little bit higher but failing to close above this level, I will be looking for the following price action. And the final scenario for me is breaking below the 4,640. In this case, I want to see a strong intraday candle closing bearish, the next candle making an upper wick, and my next target here will be, this is the zone I will be looking for. This will be the next target I will be looking for. In general, the fundamentals are supporting gold sells. Why? Because the oil prices are still high, dollar is still strong, and the inflation is expected to be higher. So all of these combined are expected to let the Fed keep interest rates higher for longer, and even some Fed members are talking about increasing or making a rate hike. So all this environment is having a negative impact on gold, and we are seeing some kind of correction or some kind of bearish momentum. That's why I'm looking to play this bias, combining the fundamentals, which are looking bearish for me, in addition to the technicals at these specific areas of interest, to take advantage of the price movement. So guys, I believe that's it. These are the trade ideas I will be looking for. Hopefully you enjoyed our session. Hopefully it was educational. Watch out for the data release we have today. Watch out for the volume and volatility. Protect your capital and trade safely. Thank you so much for joining, and we will see you soon.